Welcome to the SFS Key Charts, Signals, and Analysis. This is Morris. Now, I want to begin tonight by looking at two important charts, and the first one is gold, and the second one is gold, and then, of course, we're going to also take a look at GDX. But the first chart we're looking at is a weekly chart in the gold market, and the number that I want to sort of focus on here is this 1380 number. Now, the reason I'm using the 1380 number right through here, this reflects, now you don't see it on my chart because we're only going back into 18, but the 1380 level, this right here, this area through here, this is what is reflected in the most recent breakout. So where we're at right now is a continuing to see a very strong market from the point of the lows here, these minor lows in May. And what we have resembles nothing more than a big bull flag formation. As a matter of fact, we don't know how the week closes. Now, we've had 3 weeks in a row where we've had solid candlesticks. What does that mean? It means opening higher, closing lower. You're getting the filled candlesticks. Now, what we're potentially at and where we're potentially at on this particular market, we could be setting up for a bull harami formation. A bull harami formation would simply be a candlestick that fits inside the body of the previous week that had been a low for the move. The only caveat here, the market is not oversold, and typically you're looking for key candlestick reversals at an oversold and on an oversold market. But again, the great importance here is 1380 because 1380 reflects a breakout after a 7-year massive saucer consolidation. So the breakout through here is vitally important, and this sets up on the monthly charts with my RSI data that this sets up not only for the gold market over the course of the next several years, not only to go back to new highs, but to go beyond that and potentially well beyond that. So that's the look number one, the gold weekly chart. The second chart now is a gold daily chart. The same entity, but now instead of looking at it on a weekly basis, we're looking at it on a daily basis. Notice the parameters of the potential head and shoulders top formation and what that would likely mean. Going to targeting somewhere around, say, 1420 in that area. Now, before we just assume that that's exactly what this is, right now, the most recent candlestick action right here, that's a bull hammer. Before that, we had a spinning bull stick right here, as well as here. What do these candlesticks mean after the most recent declines and then some stability at the area of some support where you would actually begin to start looking for some support? Well, right now we're transitioning. Many times candlesticks like this don't necessarily reflect that decline is over, but when they start to give me some bullish candlesticks, I was mentioning this to subscribers earlier in the week. What can happen, you can sort of set up for a little bit of a bounce or sometimes a consolidation before you could go into a further decline. We're not necessarily done with the decline on the gold market, but we are beginning to show signs that this market may be in for a more shallow decline versus a deeper decline. So to go back now to the overall weekly chart, this is vitally important because this could be a key week. Here's what we're looking for if we get a bullish reversal in all of this: a breakthrough the top of the bull flag formation and then a move above the most recent highs. That confirms the move, and then begin looking for a massive rally that could potentially challenge 1800 or even higher on the gold market. Drop us an email here at SFS, and I will be doing a weekend update on the weekly charts for all of those interested. Now from there, I want to take a look at a daily chart on the gold senior sector, GDX. I made a big deal to subscribers earlier this week about the bull harami. The bull harami formation happened in a number of gold entities, And at that night of that bull harami, I said, look for a confirmation move. And we got it. The market rallied up. It gave quite a bit of this market back on Wednesday, but that's Fed Day. The volatility that's associated with Fed Day is pretty commonplace. So we've had a lot of red candlesticks. Again, remember, that is reflecting opening high, closing low. It's classic correction. The market has been very strong. Speaking of the gold senior sector, a lot of institutional money came in, and markets naturally began a pullback that you would anticipate. I am looking for key action right here. This was the engulfing bull back here, and the market rallied strongly. This is very good support. If we do break this now, we could go ahead, we would see a neckline, and we could go into a deeper decline. At this point, we're going to give this the benefit of the doubt, but we are watching it very closely because the correction could continue to the downside. But just let me say this. It's very similar to what I was just saying on gold itself. When you get a bull set up like a bull harami and the next day is a bull up move confirmation, that typically gives you some more room to the upside. What can happen after a hard decline market, you get something like a bull setup on a bull harami, and simply what you do, it doesn't rally strongly, it just sort of works sideways. The sideways move then typically will test the lows or maybe break to a minor new low, say down in this area, before setting up with more bullish candlestick action. We will keep you posted, traders, on how to trade this market. But again, if you're interested, sign up for that weekly close update on the potential bull flag breakout. That's all for now. This is Morris saying thank you.